There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Thursday afternoon. I'm Juliette Sarli. Great to have your company on a day where we have seen some extraordinary gains coming through across the market. We're finishing higher by 1.3% there on the CBO 200. S&P E-mini futures just slightly higher, but of course we had US markets rising overnight, supported by the healthcare sector, and despite weaker than expected private payrolls data. Locally, it is all about the banks, the healthcare stocks, the miners as well. And in fact, when we come to the themes of the day, it is the banks and bullion. Gold once again at this fresh record high and continuing to rise. There is a lot of uncertainty, of course, pushing gold higher, but it has also been just a broad-based day of buying. As I mentioned, financial stocks also looking good. The financial sector up 0.7%. REITs up about 0.4%, and healthcare stocks taking that lead from Wall Street. Meanwhile, Goldman loves gold as we continue to look at the fresh record highs of the precious metal. Goldman Sachs long bullish on gold, saying there is room for the precious metal to rally even higher. The bank saying about a month ago that gold can get to $5,000 an ounce. Were it to see inflows from just 1% of the privately owned US Treasury market. Interesting to see what funds are doing though with regards to their holdings, and I did note that there is a story on the AFR this afternoon, I should say, saying whether or not investors are cashing out or holding gold after they've already seen some 50% returns so far this year. And what shutdown? Well, of course, we had the US government around this time yesterday go into that government shutdown, but it doesn't seem like any asset class has really paid too much attention to it. We know that it does mean that we may not get some of the data, including the all-important non-farm payrolls on Friday night. But certainly when you look at assets moving, they have really shrugged it off. I had great chats today with Jonathan Sheridan from FIG Securities about the impact on the bond market. Not much. You can get that interview, of course, on our website, and also, of course, what it means for currencies. And I had a great conversation with Nick Twidell from ATFX. You can also find that on ausbiz.com.au. Bringing it back to some of the sector moves, though, let's have a look at how that gold price is affecting gold stocks. Northern Star in particular looking really good, up 4.3%. Evolution Mining up 3.5%. Miners in general having a very solid session. You've got the likes of BHP and Rio both up by 1.25% and 1.5% respectively. And Fortescue getting back towards that $20 a share mark, although albeit it's about 80 cents to go. The banks looking good as well. Have a look at that. CBA back above $170, $170.36, up by some 2.2%. Well, REA Group bought a controlling stake in a Canadian company that does virtual 3D tours of properties. Maybe the market didn't like this. REA down 1.6%, but News Corp, which of course has a majority stake in REA, down some 5.4%. James Hardie also in focus, admitting that its $14 billion purchase of the decking and fence maker AZEK has short-term downward impact. Shares, though, up 1.4%. And more movement on the BlueScope board, with the non-executive director Peter Alexander set to retire. There's also been a shake-up at ARN Media, announcing its CEO and MD Kieran Davis will step down in the new year. Shares there down by about 3.7%. Ramsay Health coming under pressure. Morgan Stanley downgrading its outlook on the stock to underweight. The stock hit a 12.5-year low. We spoke to Hazer Group in the last hour. It hit a 19-month high after the UK backed its clean hydrogen project I should say, and then there has been some profit taking in Drone Shield, which did exceptionally well during the session yesterday. All right, let's get to our guest and welcome Mathan Somasundaram from Deep Data Analytics. Mathan, have I summed it up? What have I missed? What did you think was behind today's action?
Well, that was a lot. There's a lot happening, and you've covered it pretty well. It's fascinating how day to day these things change quite dramatically, and I'm not surprised that the markets are ignoring the shutdown. I mean, let's be realistic. Mr. Trump does not follow rules, so anything he wants to do, he's just doing it on executive rules, and reality is he gets challenged by on legal terms. It doesn't matter. He's just going to do it anyway. So the threat of doing something more is not really that effective because he was going to do it anyway. So it doesn't really matter. So I think that's what the market is kind of pointing to. And I do love the fact that now every broker's jumping ahead of themselves trying to pick a bigger target for gold. Yeah, look, we've been there for a long time. I think it's a great trade, and I don't think it's going to go away. I've been saying this for a couple of years now, and I don't think that's changed. The only answer is everyone's trying to solve debt with more debt. I mean, you got to love the Australian government coming up with 5% deposit for home loans. I mean, if you want to improve affordability, yeah, I don't think getting first home buyers locked into even higher prices is going to really work out. But anyway, we're going to try because we try those things.
Yeah, I cannot even imagine, 95% borrowing there. That is quite scary to think about. But when we look at the actual index here, so some really big moves in healthcare. We saw that on Wall Street overnight as well. I did have a guest yesterday saying they were trimming some of their profits in materials and going into health. Is that a good idea at the moment?
Well, I think that's a great idea. I mean, if you think about what's happening on the macro, the healthcare was beaten up too much. Yeah, Americans like to always claim that they're going to do something to the healthcare industry. I mean, seriously, NRA is probably the only group that gets more lobby groups in than the healthcare sector in the US. There's a reason why Americans pay extremely high healthcare costs, because they get ripped off. And you think the pharmaceuticals are not going to pay their way out of it? So we weren't concerned. I think the risk with US regulatory risk was way overplayed. And that'll unwind itself over time. So we were pretty happy with. And you look at what's happening in the overall macro, we're all worried about growth. If global growth is going down, which is happening, then Aussie dollar tends to go down. So the currency trade, it tells you that commodities are going to be weaker, and the currency beneficiary is the healthcare stocks because they're US dollar earners. So it makes logical sense to move from mining into healthcare. And our top three stocks in our market are CBA, BHP, and CSL. So, today we're getting a fair amount of global flow, and that's pushing up the big caps, and those three stocks are leading the way.
Let's talk a little bit about AI as well. Andrew had a fascinating conversation earlier with a guest that likened AI to basically like when we first saw the invention of fire. OpenAI here completing this deal to help employees sell shares, and that's propelled OpenAI past SpaceX to become the world's largest startup. How much more opportunity is there in some of these thematics?
Look, you gotta love this thing, right? Everyone thinks it's, every time something comes up, I started working when there was no emails. And, and then you go through, I was writing code in DOS. And, we've been through a lot of technology change. I was there when the .com happened. Internet changed things. To say that something's going to change more than what the internet changed is kidding themselves. That is a phenomenal change. I still remember Harvey Norman's CEO, Jerry Harvey, saying, the online thing, it's a fad, it'll go away. And it is one of those great things that, things will change. They will always change. But the problem with investing and in the markets is we price in that change. Is OpenAI going to be a dominant player? Yes. But in the AI game, it's like a baby. You have to train it. You need the data. You need to have time to train it to become more efficient. Till then, you're like trying to say, it's not like you go to the Bunnings and buy an AI tool and connect it and suddenly it does everything. It doesn't. It can do the basics at scale and at more efficiently than what most people can. But when you get to the more complex stuff, that's going to take time. And just like internet, we had the .com, and it took 5-6 years before people actually realized how it worked and how more efficient it can be and how they can integrate it through the chain. And those things will take time. So I don't doubt AI will change things dramatically. I don't think it's going to be, the biggest thing since sliced bread, because everything is the biggest thing since sliced bread. But it will take time. So I think you've just got to curb expectations. The market is currently pricing like, half a dozen stocks are going to own the world of AI. But if you look at the performance of the Chinese techs in the market since the bottom in 2022 when the AI bubble started, the Chinese techs are outperforming the NASDAQ. So there's competition. Yes, there will be a split between the West and the East, but there is definitely competition in the waters.
I'm with you. I also started when there was no email. We used to go to the fax machine for press releases and get out the yellow pages to call people. Anyway, we're showing our age.
Back in my day, I used cycle couriers to send floppy disks.
All right, let's get just one other question, because News Corp today, such a big slump. Is that really just because people thought they paid too much, REA Group paid too much for that Canadian company?
It's fascinating what's happening with REA. This is not just REA. We've seen this with James Hardie. We've seen this with a number of, successful businesses making big acquisitions, and the timing of the acquisition, the market's worried about. Where we are in the cycle, the market's worried about. I think that's a fair question, because look, out of most of the techs we have, especially the old techs, where you got Car Group, Seek, and REA by far is the better product, and they had a lot of leverage to play. The fact that even they are starting to make these moves tells you that the growth outlook is struggling, and they're making big moves. And the market is starting to worry, and we saw that with James Hardie, and it was a fair enough worry. And I think you're going to have this question. You've had Domain get taken over, and there's real competition coming there, and they have specific products that they're targeting, and REA is trying to combat that worry. So there's definitely competition coming in a lot of space, and I think we can't take it, the old winners as granted, because the technology is changing, and that means new competition is coming.
All right, Mathan, always a pleasure. Remember the days of floppy disks and fax machines, and gosh, we've come a long way, haven't we? We're still 28.
Yes, we have.
All right, have a great day. Mathan Somasundaram from Deep Data Analytics. Well, News Corp was the stock of the day. We heard from our experts Grady Wolf from Bell Direct and Sanjay Narendran from Team Invest.
I think the sell-off today is simply because 21% of News Corp revenue comes from REA Group, and REA is trading on quite a high valuation right now. So investors might be concerned that the upside potential of this acquisition will limit the upside growth of REA's earnings as well, whilst paying a premium for a company like they have in Canada. It is good to diversify earnings and to look into this space, but looking at the company itself, I'm not sure how AI is going to disrupt the industry of virtual property imaging.
From what we see in News Corp, the return on equity isn't very high. It's not. They've had some growth, but it's kind of been a bit volatile at the News Corp level in terms of its profitability and its returns over the last 10 years. So it's not something that we spend a lot of time looking at in Team Invest. REA, on the other hand, is a better proposition for us. That looks like a better organisation.
All right, let's get to some of the market leaders on a very positive session. Some of those lithium players looking good. Liontown Resources up 9%. Westgold leading the pack in the gold space. Perpetual also had a good day. Paladin Energy up 6.3% and Mesoblast up by 5%. The laggards today included Drone Shield, profit taking. We talked about that. News Corp obviously in there as well. And Superloop not having a great day, down 7.6%. Let's get to the small end of town. Peninsula Energy up some 30%, along with Focus Minerals as well, while some of the laggards in the small end of town included the likes of, well, really a lot of copper players there and some other material players as well. Bougainville Copper down 14.4%. Tonight, EU unemployment coming through and US challenger job cuts. But of course, with the shutdown, there's also factory orders initial jobless claims due, but they could be impacted and not released because of the shutdown. Tomorrow, we get the Japanese unemployment rate, while the Bank of Japan Governor Ueda also is due to speak, and AGL Energy is hosting its AGM. Let's have a quick look at where the local market has finished on an exceptional day. Today, up 1.3% there on the CBO 200. The ASX 200 had a gain today of slightly less than that, but still pretty impressive, 1.1%, 100 points, a nice round number. 8,945 points, so just 55 points now off 9,000. A very solid session indeed. We'll wait to see what Wall Street brings us tonight. We'll cover it all for you and the day ahead from 9:45 a.m. Eastern tomorrow. We'll see you then.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.